All right, good day, guys. You're welcome to another video from King's FX. Okay, so in this video, I'm going to talk about Wyckoff theory. Okay, and I'm going to be exposing some secrets about what's behind Wyckoff. That you shouldn't take it as two very complex sheets. Just know what it really means, what Wyckoff actually means, and then fine and good. You get things easier for yourself. So Wyckoff is kind of consolidation or a kind of range that happens systematically. Wyckoff was founded by Richard Wyckoff in the year, I think, 1834 to 1937, something like that. Okay, but he invented this method or discovered this method of understanding a range and where a particular kind of range happens in the market and what it leads to and what it's made up of. So these are very simple concepts. So Wyckoff at the sound, it sounds like something very complicated, but trust me, it's not. If you have been doing smart money for a while right now, you're going to see and understand things easier in this video. So just make sure you sit and bring your book and pen close to you so that you can jot down the important content in this video. So here we go. Where does Wyckoff occur in charts? So I drew this very rough schematic here to explain this. Now, price moves in waves, right? Goes up, comes down, goes up, comes down. So now, in a reversing phase of markets, every time you see an uptrend, a former uptrend trying to turn to a downtrend, let's say this guy was coming all the way from here, right? Former uptrend trying to turn to a downtrend. Something happens sometimes at that point, not really sometimes, something happens all the time. The kind of consolidation start cooking up, and here Richard Wyckoff came up with a theory, a particular kind of schematic that occurs some of the time at areas like this, okay? Now this schematic, she was able to arrange them and attach some label into them, right? He used it for the stock market, but trust me, it works in Forex very well and indices. So he was able to understand the movement of this range, and there we go. So what happens in this range is known as Wyckoff distribution. So you should know this. There are two types of Wyckoff schematics. We have the Wyckoff distribution and we have the Wyckoff accumulation. The Wyckoff distribution is one that changes an uptrend to a downtrend when price is overbought at this level when it wants to reverse, right? The Wyckoff distribution occurs. And another example again that you can get is the other type of Wyckoff is Wyckoff accumulation. It happens when a downtrend is turning to an uptrend, this reversal here. So just know that the Wyckoff accumulation gives birth to an uptrend, a new uptrend, and the Wyckoff distribution gives birth to a new downtrend, right? Keep this in your head. So I'm going to explain about the Wyckoff distribution very fast. This is how it looks like. Now, I'm going to be drawing the other one live, but this one, I just prepared it. And trust me, all this is not part of it. Trust me, this is not part of it. This. Okay, this is not part of it. I'm moving this. But this is it. Now, a range, you see like this, just a range. But all these labels you see have their full names, and I'm going to tell you what they are. So now this is a Wyckoff distribution, an uptrend that turns into what a downtrend. So it normally starts this way, higher, low sheets. So right here we have the preliminary supply. I mean, at this point is the last point where price pulled back before the buying climax. BC. Now what climax is like a high point. So buying climax is a very fast move to the upside, but the last high before that fast move to the upside is called preliminary supply. So after the buying climax, what happens is the automatic reaction. That's the next big pullback you see after the buying climax. So it's called the automatic reaction. Then the next pull up or right up you see going back to buying climax is known as the secondary test. Now, this secondary test, most times is not as high as the what do you call it? It's not as high as the buying climax. Sometimes it's as high as it, but let's say this way. And there's a test to this buying climax. And normally in smart money, yes, if you find a supply zone here, price is going to mitigate it to start falling. You know this concept, right? Good. Like you see that, okay, an uptrend is gradually downtrend and all that stuff. But you see price come here, mitigate this other block and start falling. That's the secondary test. And price moves up again, break this high, right? When you use an arrow to draw this, right? See that you see the breaking. So the next high we have here is UT or trust. So it usually breaks above all this point, and that's because of little liquidity run you see on the smaller time frame and all of that stuff. You can see them even counting here where this secondary test and buying climax is very close to each other. It looks like a liquidity grab. So price normally grab from this liquidity to the other to move because banks need liquidity to move, right? So after price grabs all of these stop losses above right here, because the retail traders trading support and resistance will always want to sell at this point and have their stop losses up. So banks are trying to clear it. And here you see the up trust created, then it's pushed back into the range. So why this happens is that at this breakout of the range, many retailers are trying to buy. Breakout traders are there trying to buy, and their stop losses is under this range. And once they buy, what happens is keep them happy for a while and start coming down again. So those who trade break and retest to enter at this point after seeing the retest and put their stop losses down. So once the play right here, boom, clear everybody up, boom, clear everybody down, take the money both ways, right? The banks are using this, and then everybody's gonna say, hey, manipulation. No, WYCKOFF is trying to happen, and then price goes deeper into the range, and they start coming out again, trying to deceive you to buy again. Okay, this time price ready to fly, right? But that's UTAD, uptrust after distribution. Now, for normal smart money traders, there's another block here. This UTAD is coming to mitigate. You might not see it in the first schematic, but trust me, trying to refine that area down to even the 1 minute time frame, you're going to see a point of interest right there where you can take a trade, a sell trade from. So this is where WYCKOFF traders enter their sell trade from. Very easy, very easy, very easy. It's a stop loss, very little above, and then boom, they're gonna take take profit out of the range, depending on where you're targeting, right? So at this level, you enter for a sell. This is the level when so many people are buying, bakery tests are buying, all that stuff, and then you sell into their stop losses like smart money, and like smart money is way better. But now let's look at this in another phase, in another angle. But I know WYCKOFF is something that looks so very difficult for you to start asking yourself, how can I start cramming or memorizing all these little names? But trust me, the same concept you should know as a trader is all happening here. The same liquidity. Just try to do this, right? Identify where liquidity is in the market, and you'll be able to trade this even without labeling any shit. Like, trust me, there's a trend line liquidity here. And as a smart money trader, you know what's up. That in any trend line like this, a bullish trend line, people are buying at this trend line and they're keeping the stop losses there. And trust me, banks are going to break through. And once this breakthrough happens, like they're aiming it right from here. So me, I'll have to trade this trade because I know I'm going to break this trend line. There's some liquidity grabs around, and you should understand, if you follow up your liquidity, breakout structure, methodology, and some other stuffs like refining your POI, you find yourself trading this like like you're a WYCKOFF guru, but you're not calling WYCKOFF, but that's what you're trading. Like it's a breakout structure that happened right here, and then boom, you know that okay, breakout structure, POI, boom. Simple as that, right? Very easy. So in this where I have to show you guys an example, at least one where it happened. I'm going to use the GB USD, I think, area marked where this happened. I don't trade WYCKOFF, trust me. I missed this. It was a Friday. I missed this trade. Never came to my entry, but it just did exactly what I predicted and even went far out of my profits target. So as you can see, it really pissed me off, but then I don't give a fuck, right? another trade is coming by. We want the sell trade and they want to buy. The learn and earn was something else Friday and made a whole lot of money. Sorry, not really learn and earn. My free Telegram channel, I do send free signals on Friday, and they're very beneficial for you. You can check down the link on the description of this video and join the free Telegram channel. I send signals every Friday, free signals, right? Then if you want more of those accurate signals on weekdays, then you subscribe to our Learn and very, very affordable pricing. All right, so I kind of did something to this. Sorry, I had to highlight this area. Yeah, I had to highlight this area pretty much just to show you guys what's this whole WYCKOFF thing, how it reacts and all that stuff, right? So here we go. So as you can see, we have an uptrend prevailing that's trying to turn to a downtrend. So at this area, we can look for a WYCKOFF schematic, right? You don't look for WYCKOFF schematic just anywhere, but at these areas where you see potential reversal and all that stuff, you look for WYCKOFF. So what kind of WYCKOFF is this? WYCKOFF distribution, not WYCKOFF accumulation, because this is leading to what? A down move. So it's for us to start identifying the points in the markets where things have occurred. So right here, we can identify our buying climates right here. At this point. If I are buying climates around here, so that's gonna be BC, right? Something like this, BC. Yeah, trust me, it's not gonna be as accurate as the schematic I drew down here, but trust me, the markets are not very doesn't act in a robotic manner, right? And we have our automatic reaction right here, AR. Okay, and then we have our secondary test down, which is here, sweep up here, ST, and then we have and then we have our UTAD. Okay, sorry, our UT here, all right, UT, and then we have our UTAD here, that last test of trust after distribution, UTAD right here, and boom, we experience the last sell-off. You have your LPSY right here. So we have, like, if I'm going to be entering at this level right here, we go into smaller time frame, we're going to find out that there is a point of interest right here where this is coming to mitigate before this huge fall. Now I'm going to draw something for you to understand that this is actually based on liquidity runs all the time. So we have trend line liquidity here invalidated, right? This is a liquidity here, and there was liquidity grab. This is enough reason why you should think of selling this after other confirmation has been shown. Please, you don't just enter trades that way, but you make sure all your confirmations are solid, then you enter a trade just that way. So we have this liquidity right here cleared out, and we have another liquidity, I think. We have another liquidity right here that was cleared out, right? So you trying to understand liquidity story, build liquidity story, be able to trade WYCKOFF even without trying to look for all of these components. But the major thing is that you should make sure you understand your market structure and understand the different points in the markets where there could be reversal or whatever. But make sure you understand your market structure, you understand where imbalances are, liquidity, other blocks, and keep to your rules, stick to them, be profitable in the long term, right? So I just finished explaining a WYCKOFF bistro right here. So let's an easy one, all right, an easy one. So let's look at WYCKOFF accumulation schematic right here. All right, so So the Wyckoff accumulation schematic is just the same thing as a distro, right? As this part of the game. Sorry. Oh my god. Oh, the accumulation we're talking about is this other part of the game, the side where the downtrend is turning to an uptrend. Right? Don't forget. So it's just the inverse of this. I'm going to do that close to it. I can see the differences in them, and use the part 2. And then since it's a downtrend turning to an uptrend, it comes from the down to selling climax to the automatic rally secondary tests. Up here. It does spring. It does a test. Sorry. It does a test. Then sign of weakness. Sorry, sign of strength. And then we fly. Oh my god. Oops. Sorry. Right, so it flies up. So the same thing happening here. So right here we have this preliminary support. Yes, not preliminary surprise this time. This is support, right? Which is the last low before the deepest low make before selling climax. Look at everything is a clear opposite of what you have right there. So if you check, this is the last high before we have the buying climax. This is the last low before we have the selling climax. So right here we have secondary test, ST as a test to the buy selling climax, just like here we had a test to the buying climax. Then what do we have next? Right here we have automatic rally. Not automatic reaction this time. Right, not automatic reaction this time. We have the automatic rally. Automatic rally, remember it's an up move, like up move, right? Okay. Up move to the upside. So what we have next is the spring. You know, spring is in place of the UT right here. That's very big liquidity run, right? That very big liquidity grab here is seen as a spring. Look at this UT, where it cleared all the liquidity right here. It cleared all the liquidity right here. Then we had the next what do you call it? The next retest pullback is to a point of interest around there, which is seen as spring test. In the distro, you can get it as what do you call it? Uptrust distribution right here is spring test. So it just, as you can see, it's just an inverse of the other one. And right here. Okay, spring test. So then we have sign of weakness and all that stuff, so much right here. So boom. So this is where Wyckoff traders get into their long position at the spring test mitigation right here. So we have them pull up out of range this way, right? Simple as that. So if you check this, the same thing as same liquidity runs you have happening. Wyckoff is just price clearing equal highs, equal lows, trend lines, just like that till it gets a way up, right? So an example where you get, I think I marked somewhere in Euro USD. Oh my God, Euro USD was very friendly to us on Friday. Yeah, friendly on Friday before the news release. We had to catch a very funny trade, and this was it. It took the sales from here. It's our TP1, TP2, TP3. At this point, I told everybody take profit because I saw that news was coming and anything could happen, right? So let everybody take profit and stay away from the market. Don't give out what you have made. So I think we made her 1:2 on this trade on Friday. Yeah. For the news came up and boom, against us. And then thank God we're out of trade. So an example of what I see as an accumulation schematic on Euro USD is right. It's okay. WYCKOFF is actually something that gives many traders headache, but trust me, it's not compulsory. I don't use WYCKOFF either. I don't make it away, right? But it's a nice concept. I like it, use it, but I don't use it. Okay. I like keeping my trading as simple as possible. So right here we have something like an accumulation, I mark up and simple, right? Uptrend try to change, sorry, downtrend trying to reset into a new uptrend. So what do we do right here? We identify the selling climax, and the low before the selling climax is seen as a preliminary support. So see, these are text. So we have here to be selling climax, the deepest point either sold into, and then we have here to be um yes why line supply. That's why so we have here to be um have this side to be, I think it's secondary test. I will go for a secondary test. Secondary test, so we have the automatic rally. Let's push to the upside. Yeah, we can have this little week here as a secondary test in phase one. We can have secondary test 2 in phase 2. I'm just calling all of them one. But don't forget, if you look at them, they are equal what? Equal lows that must be cleared out by force. Price must clear them out. So if you take note of that to see what I'm trying to talk about, then this is actually the automatic rally highest point after that. It's AR automatic rally right here. So what we have next is boom, spring. Okay, spring. Trust me, this spring is very close to the spring test, and I want to make sure if you look at it, you're gonna see both legs very close to each other. We'll go 15 minutes time frame. So I can see it's clearer. Right, so we have the spring. You can check, if you look down, you're gonna see the spring test, which is right here. Spring test, smaller time frame, you see better. Spring test, and then you can see around upside, but this liquidity was cleared, right? Which is a secondary test area. And then boom, see. So if you check this, you see liquidity around, let me identify point of where you can see liquidity all cleared out. This trend line was cleared. Okay, this trend line was cleared. Even this was cleared. Even this was cleared. Cleared. So even without looking at this as WYCKOFF, I'll be able to trade this profitably, and that's the whole point. Only this that wasn't cleared out, but in the future it was cleared. So liquidity it must get cleared out, right? Future is cleared out. But it wasn't cleared out in this range, and this trend line too was cleared. They all must be cleared. Right here, it's clearing there. Okay, so that's just it about WYCKOFF. Easy peasy, right? No struggle, right? Struggle. If you can identify liquidity grab, market structure, um, supply and demand. You can trade the markets normally and make profit. You mustn't mark up all this, that, blah, blah, blah. It's not really necessary. That's the point of doing this video, to make you see with me that this is not as necessary as it sounds. So you might be feeling, I'm not profitable because I don't know WYCKOFF that much, right? You're not profitable because you actually fucked up your psychology most of the time. That's the problem, and not your system. Most of the time, if you keep to your rules, you're profitable. But all of us make these mistakes. That's why every trader still loses. There's no trader that can say psychology is the best, right? A snapshot of this, like how it looks. All right, so okay, thank you for watching this video. I'll see you in the next video. Thank you. Have a nice day.